Now what I want to show you is I want to show you that participation. I want to show you what that looks like, particularly on a footprint, because this is where the footprint's good. It points out that participation. Okay, so how were the traders entering it on the floor? It's simple. All right. I'm going to go back to that point where we had the break. So you can see the market came down at 130, and we came and tested that trend line. This is the test of the trend line. Yeah, you can see it. I'm going to make it a little bigger. Okay, so you can see the market came down. Look at the delta. A lot of selling. Okay, so there was a lot of potential selling around that that trend line. Initiative was being taken. Note the volume. Really, really high volume. Okay, so someone was stepping it up there. There was a real aggressive sell side action there. But what was price doing? Okay, that's the real key. We saw the initiative, we saw the delta, we saw the volume, but price was not responding. Now, like I always say to you, the market's not going to go down, no matter how much selling there is, unless prices start to move. Okay, so initially we saw someone absorbing all of that just on that trend line. Market went back bid. It then came back a second time. What did we see? Low volume, more sideways. So again, the market just couldn't get below that point. Okay. At this point, trading at 36.5, 36.1, we had now pierced through the trend line and gone back bid. Okay, so quite frustrating, right? You'd been short the whole time. We got the bounce first time of the trend line. We came back a second time. We broke through the trend line, and there was no impetus. Okay, no initiative taken. Note the low volume. Note the lack of delta. Okay, so what we want to see when we see breakouts or tests of trend line and all these things is we want to see that initiative taken. So that's what we're looking for. We're looking for that clue that the initiative's in. And this is where it comes. Watch very carefully here. Okay. The second attempt at breaking that trend line. Let's see what happens. Okay. The market comes down. We test it. And note what happens all of a sudden. The market does 10,000 contracts. Okay. So 10,000 contracts traded. Delta goes 540 negative. And we get a second rotation of another 10,000 contracts. So in a space of 10 minutes, we did 26,000 contracts. Okay? Now note, in the previous 45 minutes, we didn't even do 20,000 contracts. And that's the shift. That's the initiative finally being taken by the sellers. And that's the real key, guys. That's the crux. That's what I want this entire debrief to be about. Is that get away from this idea that, you need to be picking levels and randomly selling. The levels don't make a market go down. The levels don't make resistance. The seller makes resistance. The buyer makes support. When the sellers step in, it will show up. That's when you want to be selling. When the buyers step in, that's when you want to be buying. And that's the real key. The art to becoming a good trader. Get these ideas out of your head of, running a market 200-300 ticks, doing these holy grail trades. Okay, that's not how the game works. Right, the game works when the market starts to sell off because there's a seller in it and you want to be short. That's when you get in, not before. You only get in once that seller steps in. Why? Because it's that seller that makes the market go down. Okay.